Okay, right. Next up, we have Disrupting Fraud Investigation with IBM and Luxoft. And we're going to hear from Glenn Marr, who is a long-standing industry fraud expert. A lot of us will come across Glenn in various guises in the past. He's had a history of top fraud jobs at IBM, the IFB, AIG, and Zurich. And Frank Pinder, who we're delighted is joining us from the US, who's the Senior Director of Insurance Analytics at Luxoft. I'm really looking forward to this session, as fraud is and will remain a significant challenge for the industry, but it's quite rare to find a purposeful, outcome-focused, strategy-led solution in insurance companies. So really looking forward to hearing more from the guys about how we should approach the challenge of managing fraud. So welcome, guys. Great to have you with us.
Thank you.
Frank, I'm going to go to you first. Can you just give us an introduction or explanation of the IBM Luxoft strategic partnership and what it translates to for insurance company clients?
Yeah, sure. So for the last sort of 5.5 years before joining Luxoft, I looked after the IBM financial crimes program on a global scale as the financial crimes leader, working with Glenn to help insurance companies fight fraud across the globe. And as part of that, we decided to enter into a partnership with DXC, and Luxoft is a DXC company because DXC had wide and vast penetration into the insurance market, where they were providing services to insurers from infrastructure to claim systems to policy administration systems and the like. And we thought bringing those two together would create a symbiotic relationship that insurance carriers could benefit from. As part of that partnership, what we've done is we've brought IBM technology with DXC and Luxoft data science and data engineering teams, partnered with IBM's data science and data engineering teams to truly offer a unique AI-based machine learning solution that allows companies to take advantage of really the leading technology in the industry. And as part of that partnership, we've created fast start programs which allow insurance companies to basically, the best way to explain it is to be able to get a AI machine learning technology solution off the ground and running and detecting fraud at very, very little cost, very little to no cost in some cases. And that we have seen is really taken hold to allow insurance companies to, identify fraud, or at least be able to determine how much fraud is in the system before committing to a much more in-depth, economically committed solution.
So that's fascinating. So what you're saying is actually you help them build their business case for the second level of investment. So you go in there and you do the analytics that actually helps them identify the ROI and the business case that they can take to the board to say we need to invest in this way.
Yeah, definitely. I mean, and the real benefit, I think, is being able to have the access to a combined team of data scientists and data engineers from two of the top technology companies working together at no cost to the client. I mean, that's really a value add that we've seen.
We've heard a lot about AI and machine learning, and we're very careful not to assume that everybody knows what it is. Can you just give us a quick snapshot of how AI and machine learning works in this instance at a practical idiot's level? One that I would understand probably, Frank.
Yeah, sure. So, I mean, there's a difference between business rules, which are sort of binary, right? It's either if this happened, then that. So if the claim happened after midnight, if there was no witnesses, if there was no police report, well, it's probably potentially fraudulent, right? Whereas machine learning models create features that they are generated by training the models on the customer's claim data and the known fraud cases that we've learned from other customers and that particular customer's data. And then the way that the machine learning models work using Watson machine learning technology, they actually learn to adapt and tune themselves to the data as you get feedback from how those cases matriculate through the investigative lifecycle. So as cases close and we learn which of those features identify fraud best and which of those features end up with the best outcome, the machine learning models, for lack of a better term, tune themselves. Right. And it takes out a lot of that human involvement. They begin to learn as if a human would learn. And that's the AI component of it.
Yeah, perfect. Thank you. And in terms of current practices, to talk through how, and this might be one for you, Glenn, I'm not sure, how the insurance industry is currently managing fraudulent claims. What are the fault lines in fraud claims management, and where is change needed?
Yeah, thank you for that, Stuart. Good question. Frank's just articulated one route to helping insurers deal with fraud. Now, if you look carefully at the way fraud has evolved and the way insurers have tackled it, it started off as best described as a cottage industry many years ago, very much a back office type role. And it's progressed, and the fault lines, as you call them, that's a good description, focus on, there are still many insurers stuck in what I call the historic approach, which is labor intensive, fairly simple, rudimentary business rules, and huge reliance on people to spot anomalies with claims. That is very difficult in an environment where you have a volume environment. We're all humans, we all have good days and bad days, and some days we're sick. But also the bit I think that's quite fundamental is that there's not enough true understanding of what the value outcome of tackling fraudulent claims is. So in other words, I'm not sure the boards truly have sight on, if you deal with fraud over the course of a year and you don't pay X amount of claims, where is that getting reflected in the loss ratio for the insurer, and how does it contribute to the overall profit and loss? And I hear people saying they struggle with business cases for investment. And when you look at it, I actually think one of the core issues is a lack of understanding what the value is and where in the claims life cycle value is attributed. And I think that has not been nailed properly yet. So it's a combination, really. There's probably too many historic practices around. There's too much, but ultimately articulating the true value. And we've seen that engaging with the insurers. I don't think some are really articulating that clearly. And I think if the boards understood what it's taking to achieve the results, they'd see that's crying out for automation, better use of data and analytics, and to be honest, containing operational expense. So it's on different strands, Stuart, but I think it needs to take a bigger step forward, and I think it's ultimately, I think you used a phrase once when we spoke, which is show me the money. And I think that's a spot on phrase, show me where the money is in the process. And I think that's important.
Yeah, I think that the idea, you can make it quite crude and a little bit almost unstrategic to reduce it to a Jerry Maguire phrase, but actually, there's no doubt at all that investment in large-scale technology programs and large-scale claims tech programs does require a strong investment case. Have you come across? You must have come across insurers who've done this well. Can you talk about how that's happened? Maybe a case study about where this has actually worked well and where it's worked as you would like it to work, and where the outcomes in terms of the operating expense and the loss ratio have been really powerful and persuasive.
Yeah, I have seen that, and I've seen it expand from preventative fraud tackling. So in other words, at point of quote and point of sale. So basically calculating the value of the prevented losses further down the life cycle, and also taking into account lost income, lost premium finance, et cetera, so all the way through to the claim stage. So I have seen that holistic type balanced scorecard model that you have underwriting officers and actuaries sign off. So I've seen some positives out there. I see a lot where they struggle with it. And whenever you hear that someone is struggling with a business case for investment, normally when you get down to the nitty gritty, it's about the value articulation. I think people understand it's the right thing to do. And obviously not tackling fraud is not ideal for any insurer, regardless of business lines. But yeah, you do see some good things out there. I think there's quite a lot of struggling going on. And whenever you hear someone saying, I want to buy some technology, they seem to stumble at articulating business cases. So that's where, people like Luxoft step in and say, we'll help you properly measure what the tech actually does for you, right down to, pounds, shillings and pence, dollars or euros.
Stuart, one thing I would think as an example is we had a client that was running on a business rules based type platform. And we worked with them to take about 1 million claims and the known frauds within those claims and train the machine learning models. under the business rules technology they were using, 18% of their referrals that they were getting were coming from the technology. And post that in the machine learning models, it was roughly around 32% of the incoming referrals that were accepted for investigation, right? The ones that they felt were true positives. It rose by, well, I don't know what kind of lift that is, but it rose from 18 to about 32% of the referrals were now coming from the machine learning models.
So that's fascinating. Again, I'll hit it with my simple stick because that's the only way my mind works. But but having worked in claims all my life, the two dimensions are: how do you identify those cases which are potentially at risk of being with fraudulent activity, and then secondly, how do you actually prove that they're fraud so that you actually create value, so you actually create a valuable outcome. In my simple head, I get how the AI and the machine learning will ring fence claims and identify the ones that are at risk and require further investigation. What are you guys doing? How are you using the technology to actually prove that that something is fraudulent, and therefore gives you the ability to say legally and in a contractually binding way, this claim isn't valid, we're not going to pay it? Or is it just simply that actually, if you ring fence them really accurately, you can apply the people to that group of
it's a little bit more than that. So what we've done with the technology is a couple of things. Number one is we brought the machine learning models that we've built using real claims and real fraud data. Those are available in auto, workers' comp, employers' liability, public liability, and property claims. In addition to that, we've built in about 450, 470, I believe, business rules, and these build up to run through an analytic pipeline, along with bringing in the ability to resolve the entities within the data before it goes into that pipeline, and to apply things like watch list matching and so on. That is all wrapped by a case management layer that allows the SIUs from the organization to manage the investigation of that claim from the time it's alerted all the way through the case closure process and up to and including prosecuting that case where they need to, where they can package up that evidence and submit it for prosecution. Yeah. Within that UI, that case, we've provided also investigative tooling. So there's several things in there. One is geospatial analysis, which allows them to look at where things occurred in space on a map. Temporal analysis to look at visually on a timeline where all the policy and claim events have occurred, plus when and where vehicles were repaired, when and where treatments were received by the people that needed medical treatments. And then ultimately a social networking tool that uses network graphs to show who knows who and who's who and all the relationships within data. And that runs in an automated fashion. So there's no work to be done on the part of the SIU person or the claim handler. All that brings it together with one key component: leveraging unstructured data. So right now, most systems can use data that's in the adjuster's claim notes or in the claim fields, but we have the ability to extract data from those claim notes and extract data from documents that are stored in a file repository to create an enriched data set and give you access to much more data than you're able to visually see before.
Right, that makes sense. Sorry,
could I ask that, could I just picking up on something you said, the best practice approach that certainly I've been involved in and Frank's been involved in with this type of technology is you don't assume the technology is producing cases whereby there's guaranteed fraud there. That's a starting point you basically work back from. In other words, when you're evaluating the technology, you're embedded with the claims people and or the fraud people. So as the system is saying this is a high risk claim, you're providing the data to the claims handler and the fraud team to say, we want you to unpick what the technology is telling you and confirm to us whether that is going to deliver you value and whether you think that is a complete red herring or whether you think there's fraud there. So we've been involved in models whereby during that testing phase, the insurer is actually dealing with the cases and actually at one point actually starting to recover money. So what you're trying to do is separate. The tech will produce an outcome. You need a human involved to validate the outcome. And once the outcome is validated, so it actually adds real value, you then have the starting point for a business case. So I think I'm going back to that point around challenges in the market, there isn't a generic, simple definition of what constitutes fraud. And a lot of insurers don't investigate claims to the nth degree to prove fraud. They are looking to defend themselves, and they may not go all the way to prove fraud because they're trying to tackle it also in a commercial way. So you'll have the claims where they suspect fraud and the ones that are proven. And there's different sides to this. But ultimately, this isn't a tech on its own. It's a tech working with the humans, because there's a huge amount of knowledge in the market about what fraud is. And that knowledge needs to be put in the tech to start the automation.
I 100% agree with that. I think this is a theme actually of the evening, really, is that technology is going to be an enabler for our very best claims people to make the highest quality decisions. Yeah. Technology is unlikely ever to replace the very best claims. I've experienced last year working with an incredible group of guys at Insure the Box in Isidoa, who really really excited me about the way that they were highly driven and focused and smart about the way they investigated fraud claims. But they've got to be supported by the very best technology, and then they can do even greater things. So I completely get that. I guess one of the other themes that's coming through the evening is that we're heading towards ever more digitalization of claims, and it's great that we've got AI and machine learning in fraud, but we've got AI and machine learning all the way through the claims value chain. Is that in itself going to present is it going to reduce the fraud challenge, or is it going to increase the fraud challenge for insurers?
I think when you hear, I've heard a lot of people talk around digital straight through processing, and I'm a big fan, so my hand's up there. A lot of claims are simple, non-complex, non-contentious claims that really should go through extremely quickly. Now, if the analytics, I won't call it AI machine learning, I'll keep it simple. If the analytics being used in there are confident at identifying genuine behaviors and equally confident at identifying anomaly behaviors, this shouldn't be an issue. It won't happen overnight. There'll need to be some tuning. Probably a few errors are made along the way, but you need people involved in this. And, when you talk about digital claims handling, which enables people to do things 24/7, I think one of the challenges, and it's actually an opportunity, is how does an insurer align the people to the digital technology? So when something's pushed off the conveyor belt to say, we're not quite sure about it, how quickly can the human respond? And if you look at fraud teams at the moment, they're 9 to 5, Monday to Friday. So if you're having claims anomalies in, you need to move quickly, because obviously some tech may spot something that looks odd, but a human looks at it very quickly and says it's okay. So you need to join the digital with the humans, and obviously make sure that is a quick process. So the decision whether to take a claim out of the conveyor belt and keep it there, or to look at it quickly and put it back, that's a fundamental area. And I know that's causing concern in the market. Nobody wants to open up the whole process so that people can abuse it. And it is the minority that abuse it, but they're expensive.
I think one of the other themes, guys, that's developing through the evening is and obviously always at the heart of every insurance proposition in this day and age should be customer centricity and creating the best experience possible for customers. But we've certainly heard about this when we looked at voice analytics earlier on. You guys are often seen as the bad guys, but actually you can play a huge role in identifying the genuine claims much more quickly, so that actual genuine claimants can get their claims paid instantly. And I think fraud is often underestimated as a tool by which you can improve your customer proposition.
Absolutely.
I know you would agree with that. So listen, how would a typical engagement work for you guys? I mean, obviously you've got a sort of a unique arrangement going on at the moment with Luxoft and IBM. How would you engage, Frank, with them? How would an insurer engage with you at the moment?
Well, they can reach out to either myself or Glenn or any of the team from either Luxoft or IBM, and we could sort of set up a program where what we would typically do is if they wanted to move forward, we would set up a program to basically stand up FCI on the cloud, map and ingest the data to that environment, and do a light touch integration with the claim system and then have the combined data science and data engineering teams start tuning the machine learning models to that data and generating results that could kick off. I think Glenn was mentioning this earlier, where they could start conducting those investigations and identifying fraud. And that process usually takes about 12 weeks to get everything up and running. And then at the end of that 12-week period, they're ready to go into production. And that's when they start to pay once we go into a live production. But we're still sending over those cases that are identified over that 3-month period so they can get a head start on fighting fraud. And all that whole process I just articulated right now would be typically at no cost.
Listen, that's been fantastic, fascinating insight, and thank you for making it all sound understandable, even to someone who's not particularly good at grasping these concepts like me. A really, really good session, guys. Thank you so much for your time, and have a good evening.
Thank you.
Yeah, thank you.